Okay, we're now up to step 3 of the stage 1 or pre-steps, I guess, where we're recording the original purchase of the asset in the appropriate journal and then ledger accounts. So in this template I've got here, I've got all the steps down the side, so I'll put them all next to it, and that's what you'll see if you look at the solutions as well. Okay, so if we are looking at recording the original purchase price, the date is going to be the date we purchased it, which was the 1st of May 2010. Oh my god, 1st of May 2010. Okay. The account we're going to use, we'll use the asset account first, because that's the debit, and it will be equal to the $3,000 we paid for. We'll then have GST clearing for 300. And the credit side to balance it will be accounts payable, because if you remember from the question, it says we purchased it on credit. Equals sum, open bracket, and you can select those two to get that there. Okay, so that's as easy as it is. That's the journal for it. Then we're going to post each of these values into their appropriate ledger account in the general ledger. So here we've got the ledger. If you look out to the side, I've put the names of each, or the type of each account. So we've got expense accounts, asset accounts, negative asset, liability, etc. So if you remember that an expense account has a debit, assets are a debit, liabilities are a credit, it'll help you remember which debit or credit side you're putting it in. Okay. So if we go down to the mower, on the 1st of May 2010, we purchased a mower from Costello. So it was accounts payable, Costello's. Is it Costello's? Let's double check that. Yes, Costello's mowers and chainsaws. So the mower was $3,000. So that is our asset account. $3,000 debit. Actually put debit in there. Then we'll scroll down and find the accounts payable. So here it is here, Costello's, 1st of May 2010, mower. And that'll be the credit side, 3,300. So we've got 3,300 balance, credit. Okay, and then finally, the last one we had was GST clearing. Chuck in the date, it was for the mower, and it was in the debit side, $300 debit. Okay, as easy as that. It's just simply putting these figures into the right, under the right heading, and into the correct debit or credit side, which should match to what we had here. So the mower account is a debit, in the ledger, still a debit. Make sense? I reckon it does. Alright, our next step is to record the depreciation for the 2010 year and the 2011 year. So you're going to get this from your depreciation schedules. So we're going to be doing these journals on the last day of the financial year. So it'll be 30 June 2010. It will be called depreciation expense. That's the debit side because we're expensing it. Credit side is the accumulated depreciation account. Okay. So for 2010, if we put in an equal sign and go back to our straight line depreciation tab, annual depreciation in 2010 was $50. So you just click on that and then press enter, and that'll pop that in for us. Now we can just go equals like that. Okay. Then we'll have 30 June 2011 depreciation expense and accumulated depreciation. Once again, put in an equal sign, go to the depreciation schedule, select the annual depreciation for 2011. It's as easy as that. Okay. Now we've got to post those into the ledger, obviously. So we will have in our depreciation account on the 30th of the 6th, 2010, we will have depreciation $50, which will give us a $50 balance. If you can think back to when we learnt about how to close off accounts to do the income statement, you'll remember that all expense accounts get closed at the end of the financial year. So along with this, we won't do a journal for it because it will be too time consuming. But because it's the end of the financial year 2010, you need to put in profit and loss summary account and move that $50 out of there. So what that means, a $50 credit will bring that back to nil. Then in 2011, you'll record the figure for depreciation in there again, which will be equal to the $300. And again, you would move that to the profit and loss summary account, which would bring our original balance back to nil. Okay, so that's the only sort of anomaly in this question that you need to remember to do. Everything else is pretty straightforward. But you have to close those off because they're in previous financial years, and the majority of our stuff is happening in the 2012 year. Okay. The other side of these journals you need to post, obviously, is the accumulated depreciation. So we'll scroll down to that account. Again, 30th of June 2010, we would have depreciation equal to a credit of $50, which would give us credit balance $50. Now, if you remember, accumulated depreciation is a negative asset account, and you know that anything that's on the balance sheet, which is assets, liabilities, owner's equity, they don't get closed off at the end of the financial year. So we're going to keep like a running tally across the years of our accumulated depreciation. So we'll just select. Just put it in there because for some reason I'm going to select. So we add those two together because they're two credits equals a plus. So we've now got 350 in our depreciation, accumulated depreciation account. And we're on to step 1. So this is the first step in that list in the textbook. So in this step, we're adjusting depreciation for any part year allocation. Right. So in 2012, we sold the mower on the 1st of April. So on the 1st of April, 2012, we'll record depreciation up until that point. So it's the same accounts that you've been using so far to record depreciation. But when we go back over to straight line 1 and pick up the 2012 figure, we actually need to go back into the formula, put brackets around that amount, and then multiply it by the portion of the year we actually owned it. So what that is from July, September, October, November, December, January, February, and March. So we sold it on the 1st of April. So we owned it for 9 out of the 12 months in the 2012 financial year. So we would multiply that by 9 divided by 12. Okay, which is going to give us slightly less than the amount for the full year. Okay. So now if we record that into our general ledger, in depreciation expense, you'll have 30/06/2012, depreciation equal to 225. We'll bring our balance to 225. And then down in the accumulated depreciation, we'll have 06/2012, depreciation equal bring in to our credit. Oops. 5, and then we'll add that to our balance that's in there. Pretty easy. So we've got 575 accumulated depreciation and 225 for this year so far. We're not going to close it off like we did with these last ones because at the moment our financial year is still open. Okay, now let's look at the next step, which is to transfer the original cost of the asset to the disposal account. Disposal account is just a working one where we're going to be able to figure out whether we made a gain or a loss. So this all happens on the day we sold it, the 1st of April 2012. We will have disposal of mower account as a debit, and that will be the $3,000 that we originally paid for it. Then our credit will be the mower account, okay, for the same figure. When we go and post these in the general ledger, you'll see that the mower account will be brought to nil. So let's do that. So here's our disposal of mower on the 1st of 2010. Mower. So that's our $3,000 debit. And then we'll go down to this mower account, 1st of the 4th, 2012. Oops, that should be 2012. Disposal of mower, which is equal to this credit here, which will leave us with a balance of nothing. So when we've got a debit and we credit the account, we take it away. Well, it's just nothing. So now we're back at nil for that balance. And that's all you have to do for that step. The next step is to transfer accumulated depreciation to the disposal account. So almost the same journal as we did for the last one, except this time it's back to front, and we'll have accumulated depreciation, which is currently a credit, so we'll debit it, and then the other side of that will be the disposal of the mower. So if I go to my general ledger and find out what the balance is for accumulated depreciation, there it is there, 575, we can put that in, and that's equal to that. And now we post that to the ledger. So accumulated depreciation on the 1st of the 4th, 2012 is disposal of mower, 225, oh sorry, it's the wrong bit, 575, which will then bring our amount to nil. And then if we go down to up to this disposal account, on the 1st of the 4th, 2012, we'll have accumulated depreciation, which will be equal to our credit over here, 575. So what that does is it brings down the value that we can claim on the disposal. Okay. Step 4 is to record the asset's trade-in or sale value. So we, on the 1st of the 4th, 1st of the 4th, 2012, we sold it for cash, so we use bank account, $2,200 including GST. So that's how much money came into our bank account, hence the debit. GST clearing will be our $200 credit, and then the disposal of the mower will be your $2,000 credit. I'm just going to stop it now because I'm about to run out of time. So we'll post those to the ledger and go on to the following steps in the next video.